Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. I hope everyone's having a good day today. I certainly am. It looks as if the market has moved to a follow-through day, which would be great. A follow-through day on the NASDEQ. And what does this mean? Well, what this means basically is that we are possibly, and this is hard to believe, but we are possibly at the beginning of the next bull market. We may have tested the low, and we may be moving higher. So, pretty exciting when that little thing happens, because that means that time to come out of cash into stock from cash. So we were in cash, and we have been moving out of cash, and now we are looking to get fully invested, because it looks as if the NASDEQ has moved to a follow-through day. And what does this mean? Well, this means that most likely we're headed north from here rather than south. So basically, why is the market saying that we're down 0.01%? Well, that's how it works. It's funny. Nothing moves directly one way or the other, but we're definitely in a confirmed uptrend. The NASDAQ is slightly off today, but it is moved way above the 50-day moving average. So we are looking good. The volume on the New York Stock Exchange is up. Dow Jones is down a little bit. S&P is down a little bit. This is when this slide was taken. And we've seen some weakness. We've seen some weakness in Apple, interestingly enough, before their 5G rollout, which is not surprising considering how widely held Apple is. So it's interesting coming into this. But interestingly enough, we're seeing some strength in some of the 5G chip stocks. And one of those, Marvell Technologies, I have in the small portfolio. So kind of an interesting thing to look at. So let's look at the SPDR. This, by the way, is the world's largest ETF. It tracks the S&P 500, and many, many people have their entire life savings invested in this ETF. So why is this important? Well, this is going to show the general trend of the market. This looks as if we've tested, we went down all the way down here. This was the bottom of the coronavirus pullback. Then we have moved up, and then, we pulled back a little bit, hesitation, but we've been up since then. Now, why is this significant? Well, the reason it's significant is because we are just pulling about above the 300 mark on, well, that's the Qs. Let me pull back to, there we go, back to the SPDR. We're just pulling back up to about the 360 level. Now, if we get to 360, that will be a continuation of the of what was broken when the coronavirus hits. We went down, 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 and then we came up, and then we hesitated a little bit. We had a little bit of a correction, and now we seem to be back in the uptrend. So this is a very bullish chart right now. So if we clear the 360, we're definitely, possibly going to a new higher level, which I find absolutely amazing, considering everything that's going on with the election and everything like that. I can't explain it, but that's kind of what the charts are saying. The QQQ, this is the NASDAQ 100. This is the largest ETF that covers the NASDAQ 100, and that's basically the NASDAQ. That's your Facebook, that's Microsoft, it's Apple, it's Amazon, all the really good stuff. All the growth stocks are in this one. It's a little bit off today, but it is also forming this very nice pattern. It's moved off the 50-day moving average, and it's moving up. And what's significant here is we had a huge day of volume yesterday. It's pulled back a little bit, but it's still looking pretty good. So, we may be very much in a confirmed uptrend. Now, I want to show you a stock that I added to my portfolio. This is the small portfolio. And by the way, it's super easy to get a link to the small portfolio. All you have to do is go to www. Dallas Trading Floor, and there we are on YouTube as well. But you go to www. Dallas Trading Floor, sign up, and it's all free. But anyways, I added this stock to my portfolio today. It's called Digital Turbine, And I didn't really have a great buy point on this one, not like with Fastly or with Cloudflare, NET, but I bought it anyways. It is moving up very nicely today. When this slide was taken, 39.63. Now, will it continue to move up? Well, it certainly seems that way. Now, how can we be that for certain on it? I don't know, but it just seems to be moving very, very nicely up. So this one is APPS or Digital Turbine. Now, just for fun, I want to show you my current. There we go. Hopefully I'm not. There we go. Unmute. Okay, I muted the mic. Sorry about that. We should be back on the mic. And these are my current holdings: Oracle, Taiwan Semi, Tesla, Sorrento Therapeutics, Fastly, Marvell Technology Group, that's a chip company, Cloudflare, that's NET, and then this new one for today, Digital Turbine. And they're all pretty much doing fairly well, except for a little bit off on Taiwan Semi. Taiwan Semi doesn't seem to be catching fire. I may be getting out of this one relatively quickly. So I've kind of given it a chance, but here's the thing. This is kind of how I run my portfolio. If it doesn't quite cut the mustard after a certain period of time, doesn't go up enough for me, I'll typically sell it and replace it with somebody else that might be a little bit bigger, that might move a little bit better than that. So that's kind of that's basically where I'm standing currently. So let's see. Let's get over to the small portfolio, and I just kind of want to show you how I have how I'm allocated here. And by the way, I use a positioning system, and this is super easy to do. All you have to do is basically the size of your portfolio, divide that by 8, and then you develop this into full positions. Each one of these positions is 1/8 of the value, and you can see it kind of looks like a colorful pizza pie. And what I've done here is, again, I went into Digital Turbine today, APPS, and you can see we're already up 1%, which isn't bad, so it's moving nicely. We've done very, very well on Cloudflare, and we're also doing good on Fastly. Some of the other ones, well, they're doing okay, but not as much as I'd like. Marvell is in that category, but they all seem to be kind of moving up in sympathy. It is true, though. Right now, we're in sort of an upward trend, so that's kind of to be expected. By the way, if you want to take a look at my to get a link to that so you can see that basically as I'm trading it, basically you just go over here to www.DallasTradingFloor. That's what the site looks like, and then it's right down here, first and last name and then email. Put it on the list, and it's all free, and you'll get a subscription to this resource, which is the small portfolio. And this shows you kind of how I'm position trading some of the top ranked stocks. I typically like stocks that have relative strength of 90 or better to be on this list. So that's a good way to go. Also, there's another way to subscribe to the free trade alerts. It's the action trade alerts. First, last name, hit subscribe there, and you're good to go. Also, if you ever want to look at one of my back YouTubes, super easy. Just go to the site, www.DallasTradingFloor, hit the YouTube button there, and it comes on over, and it's going to show you all of the past issues of the thing. So there we go. So there you go. So it's just right now. This is the one that we're on right now. So you can see the past issues of Dallas Trading Floor. So thank you for that, and let's get to some of the questions. Thank you for waiting. Really appreciate it. So let's see. Okay. All right. Bought some Digital Turbines today at 39.77. So that's looking pretty good. Let's kind of look at the Digital Turbine right now to see kind of if we're in there. This didn't have as good of a buy point as I would have liked, but as you can see, you are already up a little bit. Even though the market is getting kind of weak, you're already up a little bit. I think you made a pretty good buy here. We're moving into, so let's look at the daily chart here to pull that up. There we go, and you can see it's moving nicely up this line. This is the line that I predict. And it's not really hard to predict why this would be, but this is kind of the trend that we're looking at here. And I don't know if you can see it on this, but there is a little pink line, and that's the 10-day moving average. And it seems to be sticking right to that. So that seems to be good. The channel on this one seems to be this channel here. So we seem to be moving up, and hopefully we'll be moving up into the $40 range. It seems like we've done pretty well in that already. So congratulations. I hope it works out for you. Always remember, though, when you do buy this, try to put in a stop loss. In this case, because we didn't buy it off of a proper buy point, where you want to put the stop loss in is right at this 21-day moving average, or about 33.28 is where you want to put your stop loss in, good till cancel. So that's just a way to trade it, and I hope that it works out well for you. So there you go. Okay, so can you comment on Livongo and SNAP? So let's look at Livongo Health. This is a very, very strong stock, by the way, and this has been on a lot of lists. LVGO. And let's take a quick look at Livongo. Yeah, Livongo Health. So let's pull that up. There we go. It's right at a buy point. So if you bought it right at one, it's right. The buy point really is almost exactly 150 on this. So it's really right at the pivot. It's a good time to buy it. It has a 99 relative strength. I love these with these 99s. These extremely high relative strength. That's very good place. That's a very good stock to buy, because that means that the funds are moving in it. So let's kind of look at how the funds are moving. And by the way, this is what really causes stocks to go up in value when they're coming into a confirmed uptrend and they have moved past a fall through day, is that the stocks will be very much sponsored by the funds. So let's look at what the funds are in there. We definitely have, this is very good, we have increasing fund ownership from 347 up to 371. So that's excellent. We have a lot of nice, very nice growth funds in here. So we definitely have good fund ownership. We've got good sponsorship here. The funds in it are about 38. Now, typically, a growth stock like this will move the most when it has about 30 to 40 to 50% fund sponsorship. So that's really looking good there. So let's look at the industry and sector. It's very good. It's in the top third. We'd want to see that. That's excellent. Basically everything just really checks out here. It's got 8 out of 9 checklist items, which is excellent. We can also see how Warren Buffett would look at it. He doesn't quite look at it as much as we do, but remember, we are growth investors, and Warren Buffett is primarily a value investor. Nothing wrong with that, but he has an insurance company to back him up. So that's a kind of a nice thing when you have that. I would love to have an insurance company and invest their funds too. So, but that's looking really good. Let's look at SNAP. Let's look at that. SNAP. SNAP. Okay, that's Snapchat. It is very strong, but not as strong as Livongo. Livongo basically is a stronger stock than this, but it's still looking really good. 27.11, quite good. It's right at the pivot. This is a very good place to buy it if you're going to buy it. The pivot, basically a cup with out handle 28.76 is the pivot on that, and so that's looking pretty strong. Let's look at it's not quite as good in terms of the checklist. 6 out of 9, which compares favorably, but it's not as good as Livongo Health at 8 out of 9. Let's look at the funds to see how that's shaping up. Looks pretty good. There's definitely increases in the amount of fund ownership. That's nice. One thing I like about Snapchat is that it's got Fidelity Contra Fund. This is a very strong fund. Anytime you see this, is sort of like the good housekeeping seal of approval. So I do like this. And on the industry rank, it's very good, top third, loving that. Now, out of these two, I think you got to go with Livongo Health, because I think it's a stronger stock based on the technicals. So thank you so much for that question. Let's see if I can get another one. What about 4 and IAA? Let's look at 4 to see. I was looking at this one earlier. Interesting stock, very good. Very good fundamentals on this one. Right now is a good time because a lot of stuff are going to be breaking out. This is Shift 4 payments, and it's in the payment area, which has seen a lot of strength. I personally like PayPal in this area, but it's very good. It's pulled back a little bit. It's got a relative strength of 93. It's definitely pulling back a little bit today, right into the buy zone. The buy point at this is a cup without handle, 56.20 is the price on that. Now at 45, let's take a look, see kind of where we're at. Let's look at the ownership. I always like to look at this ownership because we want to see increasing fund ownership, which we do have here. And we do have some good funds in it. But the checklist is not as strong as I'd like to see it. It's 6 out of 9. This definitely passes my minimum, but I wouldn't buy this right away. I would watch list this one based on this checklist here. But other than that, it looks very good. Now let's look at the weekly chart to make sure that we're doing it right. Yeah, we definitely have a blue dot, which means that we are seeing a potential breakout here. So that's very good. There are two kind of things that I don't particularly like about this. One is it's a little bit short. It's an IPO, a little bit short on the time frame. There's nothing we can do about that, but it is looking, it will have. It will start picking up some more seasoning here, but and also on the checklist. So I want to see how it's going to react to this buy point. It looks like it's a cup, possibly breaking out from that cup, and if so, that would be good. But in this kind of formation, it's very likely that it will pull back with a handle before it moves higher. But definitely like the stock. I probably wouldn't be in it immediately. I would probably wait a little bit on this and to see on a watch list. But this is definitely a good stock, and a watch list is very warranted on this. So IAA, let's look at that one. IAA, to see if I can get something there for you on that. Excuse me, goodness gracious. This is also an IPO. And its last buy point was at 46.06. It's currently at 57.66. A little bit of coffee there. It is pulled above its buy range. It's into the profit taking zone, but it seems to be moving up the 50-day moving average. So, would I buy this? I don't know. I do like the fact that auto salvage auctions is very good. There's another one in this space. It's 6 out of 9. I like that. Ownership is good on the funds. The industry and sector 4. That's super great. So let's kind of compare this to Copart. I don't know what the Copart symbol is. So let me see let me get I think it's Copart. And I'm going to just see what the symbol is for Copart. Copart. CPRT is the symbol for Copart. So let me just take a look at Copart. CRPT, Copart. Oops. PRT. There we go. There's Copart. Let's look at compare IAA to Copart because that's really the comparison here. Copart's a little bit more expensive, but it seems to be, it's got an 88 relative strength. Let's look at the fund ownership, 77 on the checklist. That's pretty good. Ownership, quite good as well. Okay, we've got the mid caps. We've got increasing fund ownership. This is a little bit more seasoned stock here, and it looks to be right at about at the pivot. So let's see if, yeah, it's really in a profit taking zone. So really you can't buy this one. I would say out of these two, IAA is probably your best bet based on what I'm seeing here. They're both in the profit taking zone. So they're both not screaming buys, but they're both pretty good. This is 91 relative strength. I typically, if it comes down to a choice and they're pretty even in terms of everything else, I like to pick the one that has the higher relative strength, and that's definitely IAA. So that is probably, if I were looking at the junkyard business, that'd be the two that I'd be looking at, and I'd probably pick IAA above Copart just based on those criteria, but they're both quite good. So that would be the that's sort of the look-see. Probably if I were looking at between 4 and IIA, I'd probably take 4. So that's it. Possibly a little high, but we're in a stock option. Yes, I do. I think that well, that's I'm answering my own question. I answered that before we came on the air, and that was about buying NET, Cloudflare, and also buying Fastly. A little bit high, but we're in a strong uptrend, so I think we ought to be fine on that. So we ought to be fine on that. Apple is down today, but it usually is on an event like that. What about Workhorse? Seems like is going down to the 50-day moving average. Yeah, you know what? I think you're right. A lot of hype has been built into this 5G event for Apple, and Apple's still doing great, but it's just how much can it sustain the kind of growth that they've had? It's really difficult. So just to take a look at Apple, it is pulling back a little bit. As you can see, it is down. It's down about $3, which is a lot, actually. Again, there seems to be some resistance at about 125. So this is kind of a classic, buy on rumors, sell on facts. So we're 16 days in front of earnings. I just think that this one may have difficulty punching through 125. And remember, before the split, 4 for 1. Basically, the stock price on this was basically $500 a share. So on a split basis, we're basically right at 125. So that's I think for right now, that's probably the ceiling on this on Apple. I do think it's gonna pull back and consolidate a little bit. Let's see what the funds are saying. They're basically pretty much the same. I mean, there are a lot of funds are in this. Fidelity Country Fund is 3%, which is excellent. And by the way, Warren Buffett, I think, is the largest. Berkshire Hathaway, I think, is the largest owner of Apple stock out there. But the checklist looks okay. 6 out of 9 is not bad. That's my minimum criteria. And the ownership is about 28% funds. Insurance companies, see where it says insurance company here, 6%. That is basically one insurance company, and it's called Berkshire Hathaway. So that's really the biggest owner. 6% of the company is owned by Berkshire Hathaway. So on Apple, I just think that it may have run out of a little bit of gas, and if you have profit in it, you might want to consider reducing your position a little bit. Not that it's going to fall out of the sky. I don't think it is, but I do think that it's seen its growth for a while, and it's kind of like stocks go through seasons. So and I think that's definitely true with Apple. MELI. Let's see if I can get some information from MELI. All right, there we go. And Michael Libre. Oh yeah, I like this stock. This is a South American retailer, Marco Libre. I didn't study Spanish in high school. You could tell. I should be fluent in it, but I'm not. It's right at the buy zone. Very nice on a consolidation base at 1270. That's the pivot. It's right at the pivot. This is a strong a stock in retail, 94. If you're going to be in retail, it's probably best to be in places like Latin America because retail is going to be very, very strong there, and this is definitely the case here. The ownership is about 56% funds. This is a really good stock. I have never owned it, but I like the action on it. It's just coming into a buy zone right now at about 1270. So that might be of interest. Here's the thing. People say, well, gosh, the stock's so expensive. I would never buy it. It's too expensive. Well, just buy fewer shares. That's the key. So when you are considering entering a position in any stock, the most important thing to do is to figure out what one full position is. And one full position basically is the value of your portfolio divided by 8 is going to give you a number. And then that number, you can buy up to that number of shares for that amount, and that will give you one full position. And that way, you kind of enter one position and then another one, but that way you don't overweight from the get-go. It's always best to kind of move into a position as it's moving up. So don't try to buy in the dips. Everybody, like in CNBC and places like that, they're going to tell you, "Oh, go in there and buy in the dips. You'll average it out." Well, maybe if you've got an insurance company or something like that, don't buy in the dips. It's just a bad strategy. You want to buy as the stock is moving higher. Now, interestingly enough, you want to buy as the stock is moving higher, but you also want to sell as the stock is moving higher. You go, what? Well, you just basically want to try to eliminate as much of the down as you possibly can. That's why when the market condition changes, when it moves to a confirmed uptrend to an uptrend under pressure or to a correction, that's why you start to get out of the market. And we've just come through one of those where there was about a 10% correction, and now it has come to a follow-through day and it's moving back up. So now it's time to go back into the market. If you've been watching me any amount of time, you know that a few weeks ago, we were in a correction and we went to basically all cash. And then we stayed at all cash and we just put the little toe in the water. And now we're fully invested because we've had a follow-through day. So this is kind of how it works with, moving into a position. You basically take the value of the entire portfolio down, and I do that here, and I just calculate what the full position value in this small portfolio is, $870.92, and then it's going to give us the calculated size of one position. And so as I go into the stock, you can see it then moves from extended to yes, it's in the zone, or not. So this gives you an idea of how to come into a position. You don't go in all at once, or you go in with a full position, and this helps you diversify your portfolio and you manage your winners this way. Now, when I get to a situation where essentially I'm fully invested like I am today, there actually is $21 left in the account, not a lot. What I'll do is then I will start looking at, we'll start firing the ones that don't make the grade. So if we have any in here that just aren't making it, they've been in there too long, like Oracle, for instance, or Taiwan Semi, we'll probably sell those and find ones that are growing faster. So that's kind of your position trading. That's a good position trading strategy. Anyways, okay, so let's see. Workforce is down because the U.S. Postal Service said it was delaying a decision about replacing vehicles. Well, yeah, the biggest problem with the biggest issue, unfortunately, with the U.S. Postal Service, and they're a huge user of, is they are. It's going to depend on who wins the election, I think. With that, right now, the Postal Service is making a very, very large loss, and it will probably continue if the other party gets into power. Whereas if the party that's in power now retains in power, they probably, and again, I'm not political here. I'm just saying they probably will initiate cost cutting, and that could affect a purchase of something like Workhorse. So it is definitely up in the air as to that. It will affect that because that's really one of the biggest. That's really one of the biggest. That's one of the biggest orders that the government is going to do with Workhorse. So let me just take a look at how it's trading. WKHS is the symbol. Is that right? There we go. Workhorse Group. I should know this off the top of my head. Okay, this is how it's trading today. It's down very significantly, pulling back to the 50-day moving average. This is another reason why when you buy, you want to set those stop losses so that if you do have a stock like this that does collapse, this isn't really collapsing, but it's down 10%. So that's pretty significant. You are stopped out on that as well. We still have a relative strength of 99, so even the very, very strong stocks can pull back like this. I suspect that we're likely that this will change tomorrow. You'll also notice this little blue line. This is called the relative strength line. When it starts to change to the downward way, that's watch out. It may be moving lower. And this relative strength is against the S&P 500. As you can see, that's the S&P 500 up here. and right now it was outperforming all but 1% of the S&P, and now it's fallen below that. So what's the situation on workhorse? It hasn't really changed that much. It's got 6 out of 9 on the checklist, so that's quite good. I just think that if it pulls back, it may bounce. This is the kind of thing where this is possibly buyable if it pulls back to about $20.99. And you're going to say, well, Jim, you just told me never to buy on a pullback. Well, that is true, but what you do is you wait till it pull back, and then when it reverses off of that line, that's when you buy it. So it's kind of like a momentum thing. It'll pull back, and then it'll hit resistance probably at the 50-day moving average. It'll bounce, and then when it bounces, that's the way to be in it. So let's look at the weekly. This has got essentially a flag type pattern. So these are tough to judge. This could move much higher, quickly, but it is very speculative. So you might want to reduce your position if you do have some gain in there. So just be super careful on that one. Thoughts on HNCKF, Giga Metals? Okay. Well, this must be a mining stock. Sometimes with these smaller stocks that are pink slips, I don't necessarily have quotes on them that are current. Now, I cannot, unfortunately. Let's see if I can get that one up. HNCKF. Let's see if I can come up with that one. No, unfortunately, that seems like a pink slip stock. Let me see if I can get some information on that. On another thing. NCKF. Let's look at that. See what that is. Yeah, Giga Metals. Okay, it's a nickel company. Wow. Okay, so it's on Market Watch, HNCKF. So why am I not seeing it on my? Okay, so this is essentially a Okay, so this is essentially a Tesla sympathy trade, which it's okay, I guess. Yeah, I just I think that probably it's not as I'm not showing access to this chart symbol. Mining companies are notoriously hard to trade because they typically are very binary. Either they're up a lot or they're not any at all. What I would recommend is probably, if you're interested in the mining sector, go to one of the more established players that has better cash flow, maybe a Freeport-McMoRan. I think that's Freeport, F-R-E-E-P-O-R-T. Let's see if I can get a Freeport-McMoRan. And I'm just looking up the symbol for that right as we speak. Freeport FCX. So let's look at the chart for FCX. This is sort of the proxy for U.S. mining, Freeport-McMoRan. So let's look at that one as opposed to the Giga Minerals. This is definitely going to benefit when it comes to that. I think that this is probably a better bet. There was a cup with handle. There was a buy point at 1369. It has a relative strength of 90. I like that a whole lot if you're going to be in the mining sector at all. Also, it's got 7 out of 9, which is good on the checklist. The ownership is also strong from the funds. This company, Freeport-McMoRan, will benefit. It's also got a industry rank of 21, which is super great, mining in metal ores. So this is going to, as we come into, as the economy opens up again, a company like Freeport-McMoRan will benefit. This also has for a mining company, this has an excellent chart. It's moved from the 200-day. It's right on the 50-day. So if you're looking for a play in the if you're looking for a play in the materials space in mining, I think that you want to take a look at this one, Freeport-McMoRan, and its symbol is FCX. And I think that you might be more pleased with that in terms of its because I realize that there's a lot of hype on cobalt and lithium, but here's the thing: many of the copper miners and the gold miners as well, they cobalt is a byproduct of a lot of that. So of copper mining. So Freeport-McMoRan probably is your best bet if you're looking to play the mining for the new batteries for the electric cars of the Teslas. All right, so what's your plan on Marvel? Is it a buy right now? Well, I thought it was a buy. My plan, MRVL, is to probably hold it at least for a while, and see what we're doing on it. So let's look at Marvell. This is one I do have on the small portfolio. It has a 90 relative strength. It's lost a little bit of its relative strength. I will be, I'd like to see it higher than that, but it's still really good. It definitely has a good checklist. It's 8 out of 9. Ownership is very excellent at 61%, and it does have Fidelity Contrafund in there, so that's very, very good. The industry is also excellent. It's 27 out of 197, so that's good. So anyways, we've gone through kind of the fundamentals. So where is it going? Well, let's look at the daily chart to see, kind of what the trend is. It seems to kind of bounce and bounce and bounce along. So it seems to tend to bounce up this 21-day moving average. That's the green line here. So where is it going? Well, I think it's probably going to pivot down a little bit, probably to this line. That's my guess. So I think that probably, at least in the next few days, it's likely to move here and then bounce up like that. So that's kind of what I'm expecting the chart pattern will be. As you can see, it's bouncing right off the 21-day average. So I do think that it has shown a little bit of weakness, and it's going to pull back down to that line, and then hopefully it'll be back up from there. But as you can see, it just kind of goes up, bounces down to that 21-day, up, bounces down, and so forth. So that's kind of what I expect on it. I will be holding it probably for a while, hopefully, and that's kind of the thing. The chart pattern on this is a little bit different than some of the cloud stocks, but I do think it is going to, it's probably going to pull back a little bit, and then it will move higher, hopefully. So, that's the Crown of Marvel. Okay. Is Amazon still a buy? Well, that's a good question. Let's look at Amazon, AMZN. All right. Let's get into Amazon. All right. And by the way, everybody looking at me on TikTok, I'm simulcasting this live on YouTube at youtube.com/Dallas Trading Floor. So just a shout out there for that. Now, does it look like, yes, it looks as if, it looks like Amazon's back to the races. It's pulled back up into the buy zone. So this is in the buy zone. This is very, very, this is bullish. It's got a relative strength of 90. So we're looking good. We're basically the buy point on this 33.44.29. So we're at 33.43.63. So we're definitely in the buy zone on this, and it looks as if it is going to move higher and test. So where is it going to move? I suspect it's probably going to slope up on this line here, based on the 21-day moving average. So it does look like it's going to go now with the market moving higher. I think that I think, believe it or not, and I think I think Amazon's looking pretty darn good, actually, looking pretty good. 9 out of 9 on the checklist. Of course, ownership is stellar, and Fidelity Contrafund is in there, so that's always good. That's at the top. They own 9%, as you can see. This is sort of the good housekeeping seal of approval. When you see Fidelity Contrafund, some of the real pros are at it, so, and of course it's Amazon, so everybody knows how good it is. 40% are owned by funds. Just everything's good about it. Looks like Amazon's turned the corner. And believe it or not, is going north. Man, can you believe that? It's just amazing. So let me take a look at some of the questions that have come in on TikTok. I'm sorry I've been neglecting you, but we had a lot of good questions here. So let's go back up to the top. Fastly, let's take a look at Fastly. How about Cloudflare? Okay, so let's look at Fastly first, and then let's look at Cloudflare. So Fastly, this one, this was on my action trade alerts, which it seems to have done pretty well. So let's look at the chart on Fastly for today, And basically, yeah, it's just pulling right up there, moving up $2.21 today. 99 relative strength. Can't beat that. 128.76. So this is looking pretty strong, actually. Uh, it's got a checklist of 8 out of 9, so that's excellent. The fund ownership is good too. It's got Fidelity Contrafund in there. Loving that. Also, on the industry, it's 14 out of 197. So everything's looking pretty good. Now, can you buy it at this level? Well, it's a bit extended. I'll be honest with you. The buy point really is 117.79. It's this little dotted line there. That's the buy point, and the buy zone is 5% above that. So it's pulled above that. Can you buy it on a secondary buy zone? Yes, I think you can, but it's going to be more difficult. I will be absolutely honest with you. It's going to be very difficult to buy it at this slope. It's sort of taken a little bit off, so I would be looking at the slope of the 21-day average. So I do think it's buyable, but it's probably going to pull back a little bit. It's probably going to pull back a bit, but I do think it is buyable at this level. The only thing about buying at this level currently, because it's run up so quickly, so fast, it's a little bit difficult. As you can see, it's kind of just had the high tide flag here, and then boom, it went up and it moved above that pivot, and it's pulling above that pivot. So, the thing about Fastly and the thing about stocks like this, when this kind of action happens, man, they can go up very fast. This could be easily in the 150 range, in a month or so. So, is it guaranteed to go up that much? Who knows? But it definitely has a really strong chart pattern right now. So, and of course I'm in it as well as in the small portfolio. So let's look at Cloudflare, which is a symbol NET. Let's just kind of look at that. Again, just a tremendous chart on this one too. This is a trade alert from Monday, actually, that we put out, the action trade alert for Monday, and of course, it's moved well beyond its cut with the buy point at the pivot at 45.28. It's currently at 59.65. So it's moving nicely. It's moving a little bit faster than I like it, but we have a very, very nice we have a very, very nice volume here. So this is a very, very bullish right here. Now, how long will I be in it? Well, I may be in it up until the earnings, and I probably, if it has moved up significantly, I'm probably going to sell half of my holdings the day before earnings. And the reason I do that is to protect the profit. Remember, it's not just getting a stock that goes up, it's getting a stock that goes up and then selling it so that you don't give away all that good profit. So I probably will be holding it. I'll probably be in it for at least 3 weeks, and then I probably will sell half of my position as well. I do have calls on this, so I am hedging a little bit on the price of this, and but I probably will be selling part of my position when it comes into earnings, just to preserve those profits if it tends to go up. I keep going like that. So there you go. All right. So Apple, is it a buy now? I would say no. No on Apple. Wow, and that's a tough one for me because I love Apple, and right before the split, man, I was doing great with Apple, and if you've been watching me for a while, there's a kind of a special way to trade. There's a special way to trade splits, and Apple was definitely part of that. Of course, Tesla was part of that. The thing is, when when Apple split 4-for-1, the price was about $500. So really, the top level for that, and I think it was priced to perfection at that point, was about 125. So I just haven't seen the kind of movement on it that would lead me to believe that it is going to pull higher at this point. It's probably going to consolidate a little bit into the 5G event. So, and then there's earnings after that. So I don't know if you would want to be in it right now. I just don't think it's going to be as high a flyer as it's been. Now that said, I mean, I could be off my rocker on that, but I don't think it's a buy right now, unfortunately. Okay, so is Amazon, and let's see. W, Okay. Well, this is Wayfair, so everybody knows about this one. This is the great place to get some furniture online. They've got a lot of cool stuff. I've definitely ordered from them. Very nice. They have some big warehouses here in Dallas. I don't know if they're based here or not. Not sure. It's it's definitely got a nice cup with handle pattern, and it seems to be pulling right up that 50-day moving average. It does. I'm just trying to see. Its checklist is excellent, 8 out of 9. That's great. Ownership by the funds is good. I don't see Fidelity Contrafund in here though, but it does have a relative strength of 97. That's excellent, and we have increasing. It seems we have increasing sales, and this is really important to look for. Do we have increasing sales? And but earnings are in 21 days. Even if I bought this one, I probably would only be in it 2 earnings, and then I would probably sell it. That's the way I see it. But it looks as if it's moving right up the 50-day moving average. So let's see if we can get kind of a slope there. I'm just kind of getting an idea of sort of where it might go if it just stayed on that slope, which it won't exactly, but let's kind of look at it anyway. So into November, I think you're going to be probably at the 320 level if it continues on the on the slope that it's on right now. So that's kind of my take on it. Now, will it move on to that slope? I think it will, because I think it's moving to this 50-day moving average. So it did make a high here back in back a few weeks ago, basically about 9 weeks ago at about 345. So we're a little bit off of that. Still probably a good place to buy it. I probably would watch this one, but it's still it's still moving nicely. So it definitely meets a lot of the criterias. So I can't say that I would get out of it. Your thoughts on Workhorse? I basically covered Workhorse before. The thing about Workhorse is that they're very dependent on landing some very, very large contracts. Of course, the biggest, of course, being the being the post office. And if they don't, if that doesn't happen, then they could be in trouble. I don't like companies, to be honest with you. I don't like companies that are very dependent on 1 or 2 clients. I think that's a very difficult place to be, and so that's kind of what I'm thinking with Workhorse. If I wasn't in it, I probably wouldn't get in at this point. It has moved above a buy point. There is, the chart action is quite good, but there's sort of some flags on the horizon. And there's not enough of a moat with the chassis business. The truck body business is an old business. It's been around for at least 100 years. I mean, Ford has been making truck bodies for 100 years. So there's not a lot of moat on this, and that's where they could get killed. If they lose a major contract, if they don't get the contract from the post office, then it could be very tough for them. So my guess, my personal, even though the charts are good, and this is where I'm kind of, I'm normally a technical guy, but on the fundamentals, I think that there's a red flag when it comes to the ability for them to be successful against some very large and very well funded competitors. So I'm a little bit, I'm a little bit, I'm a little bit concerned about that. Do you think it will rise? It's looking like it's going to probably pull off there a little bit. I don't think it's going to get to 50. I mean, we'll see. It does have a tremendous slope, but the relative strength relative to the S&P is moving down. So I can't really recommend it at this time. If you're in the stock and you have taken more than a 10% loss, it may be time to start considering possibly lightening your position up a little bit, or possibly selling, because even though it might move up, you'd want to protect your capital. So that's the and unfortunately, people bought on the news on the hype and sell at the peak, buy the dip and hold. I don't agree with that. I'm not trying to be negative here, but Studies have shown that buying of the dips usually is not a good strategy. You typically want to buy as the stock is rising and sell as it's rising. And buying the dips to income average down sometimes is not the strategy. I know that there's a lot of pundits that come on CNBC that say, oh, you should average down, you should buy the Carnival Cruises, you could buy the Boeings because they're all down, it's cheap. Well, a lot of those people are trying to sell their positions out. So here's what I have to say to that. Try to find the stocks that have very strong relative strength. Now, Workhorse does. It has a 99 relative strength. And then if you're going to be in it, be very careful. Move your stop loss up. When it reverses on you, you want to be sold out. So I just think that it's a little bit difficult. And I'm not trying to be negative here, but I think buying on the dips is not over the long term, I don't think it's a winning strategy. I think you want to buy into strength. You want to sell into strength as well. So, Jim, do you use a trailing stop orders on regular stops? I use regular stops and not trailing stops because basically what I'm trying to prevent is when there's a pullback, when there's a massive pullback where it can fall through an average like a 21-day exponential or a 50-day. When it pulls through those, I want to be sold out when it pulls through those averages because sometimes they can fall out of the sky. So I don't like the trailing stop. I want a hard stop. And typically, when I first buy the stock, that will be at 7% lower than where I bought it. Now, do I always follow that rule? No, because if typically as the stock goes up, you want to look to see where the 21-day exponential moving average is, and you want to set it there on that. So if there's a pullback, just typically the programmatic traders will trade on those averages like the 21-day exponential, the 50-day, and the 200-day. So that's one of the reasons why before I buy something, I typically want to see it move above the 50-day, above the 21-day before I even buy it. That's why I watch list them, get them ready, and then when it comes into the buy zone, that's when I'm buying. And then I'm setting that stop loss up, and as the thing moves up, I'm moving that stop loss up so that if it does reverse on me, I'm sold out. And this strategy does work extremely well on volatile stocks like Tesla and other stocks like that. So that's sort of my game plan on stop losses. I probably should do a whole show on stop losses because I think they're so important to being successful. BABA and DHI. So let's look at DHI here. DHI. And see what we've got. DR Horton, excellent stock. I like DR Horton. I like Pulte. I like the Lennar. I think they're all good. This is in a buy zone. I think we're coming into a very good time for the home builders. Yeah, it's right at a buy point at 77.45. It's right in the buy zone, right in there. It's got a relative strength of 91. It looks like it's increasing in strength. Let's look at the checklist on this. Excellent checklist. 8 out of 9. Now, why do I say this is so excellent? Well, considering this is not a tech company. This is a company that builds homes. And it's this strong. This is a strong company, believe me. We're looking at the ownership here. Fidelity Contrafund is in this, and it's not even a tech company. So that tells me DR Horton is quality. When you're out there, you're not buying cheap. You're buying expensive and then selling more expensive. Remember, we're buying quality merchandise that we're then going to sell for a more quality price later on. So it's kind of like we have a small store and we're getting inventory. We want the very best inventory. And this definitely, if you're looking for a home builder or for something that's not tech, boy, this is a very, very, very good one. Very, very good. I think that, this is going to be slow and steady wins the race, but I think that, this is going to continue to probably move higher into the end of the year. So very much like this stock, very much like DR Horton. I have to admit. Now let's look at BABA. BABA, of course, is a proxy for the Chinese market because it's one of the largest listed companies, and it's actually it's basically, it is a NASDEQ stock, which is amazing. but it is Chinese. So it sort of is a proxy for the Chinese market. It's just doing great, moving right up the 10-day average. Is it buyable at this point? It's tough to buy it at this point. The last buy point on it on a flat base was at 268 31 days ago. No, a little bit more than 31 days ago, actually. Relative strength is 87. That's very good for a company this size. Fidelity Contra Funds in it. Love that. The checklist is great, 8 out of 9. 39% owned by funds and increasing fund ownership. So, the biggest issue with Alibaba is where to buy it. It's not if to buy it. It's definitely a buyable stock. The question is where to buy it. And I really kind of want to see a buy point. I think really the only way to buy this one is going to be on a pullback to the 21 exponential. Is that going to be? So this is a watch list right now. It's a great stock and it's probably going to move higher. It's just where to buy this safely, and that's tough because stocks like this are so they're hard to buy because they don't base. They just keep going right up that exponential moving average. Very good stock. Out of these two, I would probably have to go with D.R. Horton, only because D.R. Horton, DHI, has a very, first of all, it's primarily domestic. There's not a lot of political risk with this. With BABA, there's a significant political risk because of the ongoing China thing. This is, D.R. Horton is probably likely to go a slower space. It's got a little bit better relative strength at 91, but they're really both very good. 87 is a great relative strength. But 80, of course, 91 is just a tad better. So out of these two, if I was looking at these two, and it's really comparing apples to oranges because these aren't really they're not in the same sector. But I would have to go with D.R. Horton over BABA at this point, just because it's just it is a tad stronger, and it doesn't have a lot of potential political risk, which you do have with BABA. So that is that's on that. So let's look at TikTok again. All right, so let's go back here. Where should we invest? Well, actually, if you want to get started investing and you don't want to pick stocks, one of the greatest things to do, believe it or not, is to just buy the QQQ. Now, here's the caveat on that. Buy the QQQ only when we're in a confirmed uptrend. And right now, we are in a confirmed uptrend. So what do I mean? What do I mean by that? I mean, that seems like such a strange thing. Why would you do it that way? Well, it so happens that there is a very, very good way to trade that's really, really kind of very easy to do, and that is to use the IBD method of trading the QQQ index. And basically what that is, and I'll show you that, is basically the QQQ index. Now, if you want to just set and forget and you just want to trade the IBD 50 index, you can expect a much better return. Now, I'm not paid by IBD or Innovator funds, but I just want to show you this relative performance based on the S&P 500. So the S&P 500 is sort of what you would consider that would be the spider. Well, look at the performance of the IBD 50. It's so much better. So if you're looking to just kind of do a total set and forget, there is a fund out there called the FFTY. It's an ETF that tracks the IBD 50. So in an uptrend, it will do very, very well. So that's kind of if you want to just get started investing. If you want to really start to invest with with real stocks and everything like that, I know that sounds strange, you might want to consider going to my website, www.DallasTradingFloor, and going over to the Learn to Trade bookshelf. And on the Learn to Trade bookshelf, we have got two really great books. How to Make Money in Stocks, The Winning System, Good Times Are Bad. That's by William O'Neill. And then also How to Make Money in Stocks, Getting Started. That's by Matthew Gilgani, and that basically is a bunch of checklists that basically is a companion volume. These two are excellent. If you want to start learning, get this one, start reading, and you'll be amazed at what you learn. Now, here's the thing. You're going to learn things in this book that go counter to what people on CNBC and everybody has taught you. So get ready for that. But this is a great way to go. And it's totally available. Just go to www.Dallas Trading Floor, and that is where you can go to the Learn to Trade bookshelf. So thank you for that. All right. So, okay. So, yeah, Workhorse is your playground for big money movers. So expect the volatility. Workhorse is still a solid investment. Okay, well, okay. It probably is. It probably is. I just don't like the space as much as I like other spaces. But absolutely, I think there's going to be a huge demand for for truck bodies. I really do. But the problem is Ford, which has been in the truck body business for 80 years, makes truck bodies for electric vehicles, and they're going to be a lot more of them. So expect some competition from Ford, and they have the political connections too. Are you selling Oracle? Well, I may be selling Oracle in the future. It just hasn't really pulled up and done as well as I would have liked to have. I mean, I'm up on it. I'm definitely up on it. So in the small portfolio, it's definitely it's on there. It's right here. It's number one. I basically in the small portfolio I have 14 shares. So this isn't a lot. I bought them at 59. It's at 60, so it's right at the buy point. It's really doing nothing. I mean, I'm up 3%, but I'm probably going to be selling this. I'm probably going to be selling this and moving the money into where I can make a little bit more money. Some of the cloud stocks possibly, or something like that. So that's kind of that's kind of the way it's going. Okay. What do you think? We've entered a bull market. Is it saying that investors think Trump is going to win? Well, actually, this is what's so strange to me. You would think that, wouldn't you? Well, it turns out, and I don't know if this is true or not, because the IBD is very accurate on a lot of things, and right now they have a poll, and it was one of the most accurate polls last time around. Basically saying that that Biden is going to win. I don't, from my experience, that doesn't seem to be the way. But I have learned over the years not to trust necessarily my eyes and ears. It's more you want to look at the numbers. Now the question is, can the numbers be manipulated? Absolutely. So I don't know, but it's definitely very interesting, because many of the polls are showing that Biden is ahead significantly. I don't see it out there, so I don't know. So maybe people know something that I don't. It's interesting. We're in a confirmed uptrend, which is amazing considering we haven't even gone through the election. So it's really interesting, kind of weird actually, just to tell you the truth. What about Vive? Vive Systems is a great company, and if you've been with me for a while, you'll know that I love trading this. I was trading this when it was about actually it's 115 to 170, and it is just on fire. It is a great company. Too, it's one of these just super cloud-based companies that software as a service. It's 93 on its relative strength. It's right in the buy zone right now, and it looks like it's going to go higher. Let's look at the weekly chart to see. It's just moving right up that 50-day average. It's right at the buy point on a flat base, right at the pivot. So yeah, this is definitely getting invested in. So this is going to go higher. It's 100% on the checklist. The ownership in this is excellent. I mean, it's more than excellent. I mean, these are some of the biggest players. Of course, Fidelity Contra Fund is in there. Love that. That's a good house to conceal the pro. So I just see Viva going higher, at least into the end of the year. That's what I see for Viva. So I think it's a winner. And right now it's on a buy zone. So that's kind of an interesting thing. What does Run look like today? Let's look at Run. Are you in? Let's take a look. Sun Run. It's pulling back a little bit. Seems like it's maybe topping out. Relative strength, it's still relative strength is 99. I love that, but the last 2 days has been selling. There was a peak here, and so it does look like it's going to pull back at least to this to the 50-day line. Expect this thing to move down, possibly to about the $60 range in the next few days. That's what I'm expecting on it. Will it continue up from there? Maybe. Because it has increasing fund ownership in the checklist, unfortunately, is not as good as I'd like it. It's only 5 out of 9. So would I go into Sunrun at this point? Probably not. But that's not to say it's not a great stock. It's got a 99 relative strength, so that's very strong. But I probably would not be buying this at this point. Question on the trade desk, TDS. Let's see. This is a great company too. Great concept because, with Facebook and Google controlling so much of the market for advertising, this is sort of the alternative to that, and it's a good company. So if you have a really strong website, these guys will broker ads for you, and of course on a revenue share basis. So 97 relative strength, excellent. Let's just kind of look to see the buying criteria here. There's no real buy point on this one. Again, very good. 7 out of 9. Definitely like that. Ownership is excellent, and it is increasing, but not as fast as I'd like it. Industry and sector, 8. It's excellent. Let's look at the options. Let's see if there's any option plays here. Goodness gracious. There seems to be some options at about the 640 level. That would be in the money in about the November timeframe. So people are selling some in the money calls, it looks like. That tells me that it's probably going to pull back a little bit to the 50-day line, but it looks pretty good. There's just really not a good place to buy it at this point. There's no real base on this, so I wouldn't necessarily buy this one. I'd watch list it though because it's very strong, but there's no real good place to buy it. There's no real base to buy it off of, unfortunately. So that's my Zoom, ZM. So let's look at Zoom, ZM, and okay, yeah. Pull that back. Here we go. Up. There we go. Zoom. Zoom is zooming. It's just amazing. It seems to defy gravity. 99 relative strength. It's just moving right up that line. It's at 518. Eventually, this thing is going to fall back to earth, but it doesn't look like it's doing it right now. It looks like, its profits are up every quarter. So, who knows? I mean, I'm just looking at the options plays on this. Wow. I mean, look at these. Look at this. This is unbelievable. These are expensive options. $400 option is 105. So let's look at that. Yeah, well, see, it's in the money. Man, well, not a really good place to buy this, but just powerful. Just powerful. I don't want to call this one out, but I just don't know how to buy this one. It's just, I don't know how to buy it. Very, very strong, though. Very, very strong. Well, I have come to an hour, so I have finished for today, anyways. But thank you so much for dropping by and taking time to take a look here. If you want to get on the action trade alerts, it's super easy to do. All you have to do is go over to Dallas Trading Floor. Dallas Trading Floor. And of course, we're on YouTube as well. So if you're on YouTube and you're watching me now, please, 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 I said please a minute enough times, please like and, hit that like button. Hit that like button. Yeah, smash it. So please do that. I would appreciate it very, very much. Also, if you want to get on the Action Trade Alerts and you're on TikTok, it's easy to do too. All you do is you go to my profile, click the link, and it takes you right to the sign up page. And of course, it's all free. And from there. So till tomorrow, thanks again for taking a look, and hope to see you. I'll be on at 2:30, and if not, we'll have and before that, if we have action trade alerts, we'll have those as well. So remember, you need to get on the list for action trade alerts, and that's www.Dallas Trading Floor. So see you tomorrow.